Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Tuesday, July 28, 2009. The euro-dollar pair rose to test the 1.43 area again in overnight trading and was again turned back. The slide following the failed test of that level was much sharper though than in yesterday's session, with the pair sliding about 170 pips to the 1.4130 area, which tests the low from last Thursday. The pair's range has also started to widen. The slide today was caused by weaker stocks in the U.S. and a worse than expected consumer confidence reading from the U.S., which we'll get to shortly. First, let's take a look at a couple of other dollar pairs. Here, the dollar fell about 120 pips against the yen, wiping away the gains in the pair since last Thursday, though the Greenback did find support at the 94 level. U.S. stocks are off sharply in the morning, helping to drive risk aversion, but they did stage a rebound in the afternoon, which helped the Greenback rebound from its support level. The pound-dollar pair fell following a test of 1.6550, an area of resistance from last week, sliding 150 pips to support at 1.6390. That ran up against an upward sloping line of support as well, which shows the last 2 weeks of price action squeezing into an ascending triangle pattern. Now let's turn to our fundamental releases. U.S. consumer confidence slid for a second straight month in July. The present situation index slipped to 23.4 from a revised 25.0 in June, while the consumer expectations for economic activity over the next 6 months fell to 62 from 65.5 in June. The declines are a result of a worsening job market, which is curtailing the willingness of consumers to spend. U.S. housing prices in 20 metropolitan areas were down 17.1% on the year in May, a better than expected result, with the 10-city index improving to show a 16.8% drop. After 16 consecutive months of record annual declines beginning in October of 2007 and ending in January 2009, the indexes have now shown 4 consecutive months of improvement in annual returns. On a monthly basis, the two indexes reported positive returns for the first time since the summer of 2006, a signal that home price declines are finally stabilizing. A third release, the Richmond Fed Manufacturing Index, rose to a better than expected reading of 14 for July, meaning manufacturing activity is expanding at a faster pace. The overall activity index was pushed higher by stronger readings for shipments and new orders. The US dollar-Canadian dollar pair slid lower again overnight, testing the area around 1.0750, but was brought up to the 1.09 level as risk aversion was prominent during the New York morning session. However, as US stocks regained most of their losses prior to close of trading on Wall Street, the loonie managed to move back to the 1.0820 area. Tonight, Japan will post data on retail sales, while New Zealand will release data on building approvals and business confidence. Overnight, the UK will unveil figures on consumer lending and mortgage approvals. Tomorrow, the US will release its durable goods orders, while Germany posts inflation data. And that concludes today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.